Trini, my general approach to this is maybe a little bit different than what others sort of suggest you should do. A lot of folks will say in retirement, you need to invest for income. So what does that mean? It could be high dividend paying stocks. Some, want to get into like covered call ETFs that generate that call option premium that they kind of view as income. Some might want to move more money into REITs, which can often pay more in terms of income. I generally find that unnecessary. I don't think one needs to distinguish between income on the one hand and just selling shares of your ETF or your mutual fund or your stocks when you need to have a distribution from a retirement account. I just don't feel a need to have the investment itself generating the income for me. And so I invest the same way today as I did 30 years ago. My stock to bond allocation is a little bit different. I was about 90% stocks most of my working years, and now we're about in the 70s percent for stocks, and probably will stay in that range is my guess. So that's changed, but I've not moved to any kind of investments that are going to generate sort of more income than what the market as a whole would generate. I find it unnecessary, and a lot of those investments over the long term don't perform as well. Now, if you skew your portfolio a little bit towards some higher dividend-paying stocks, do I think that's the end of the world? No. And I do recognize that there is sort of a psychological advantage, because if you have a portfolio that can, say, generate 4 or 5% in income of one form or another, principally dividends and interest, there's a real comfort in that, because now you've set that portfolio up, and now you don't have to make any more decisions. You don't have to decide when to sell shares or when to pull money out. The dividends get paid to you typically quarterly. The interest probably monthly, depending on what kind of fund you're invested in. And then you can just spend that money. It's sort of put in place and it's done for you. And so I do get the appeal to that. And I suppose if you skewed your portfolio a little bit towards those income producing investments, in my mind, that might be reasonable. I think where you really can get into trouble, though, is where the market as a whole, let's say, is paying a 2% dividend, and you found some kind of fund that's going to pay you 6 or 7% dividends. I think in the long term, on a total return basis, you're probably not going to be as well off, and could find yourself, not having the same retirement savings and, frankly, income that you would have if you just had, frankly, a 3 or 4 fund portfolio. So that's my take. I don't think you have to make dramatic changes at all. And in our case, we haven't made any.